Hi, this is Soumya Sarkar from Wealth Redefine. Today we have seen that Indian market has again gone for some major corrections. Now when the Indian market is going for a major correction, we see on the opposite way the China market is actually going up. Suddenly after almost 3 years of gap, China market started exactly the same way Indian market started in 2021. Keep on rising. In last 2-3 weeks, the China market has almost gone up by 30%. After the China has come up with a lot of stimulus in terms of real estate, we have seen that China market have started moving upward. And if the China market is moving upward, how it is going to have an impact on the Indian market as well as the global market? Now, let me give you slightly bigger prospect of the China. China is one of the biggest manufacturing hub of the world. Most of the goods which are getting sold in US or getting sold in Europe or India are from China. So definitely if the Chinese economy are down, obviously the global economy will have some negative effect because of that. Second thing is that if Chinese economy is down, definitely the oil prices are also going to go down because China is one of the major importer of the oil and the largest consumer of the oil. So obviously the China market has a lot of significance in terms of in the global market. It is probably the most significant market after US market and to some extent is Japan market. Now China was in bad situation till last 5-6 years. After COVID, their economy did not perform, their stock market did not perform, and in last 2 weeks, suddenly the China market has started performing. Now, whether it is performing is going to remain consistent or not, definitely we do not know at this point of time because it is too early to comment. It is a 2 weeks of thing which is not even 2 months of China performing. So it is just a 2 weeks, and in 2 weeks we cannot tell that whether it is going to perform for a very long period of time or not. But for the global economy to get the sustainable valuation, Chinese economy needs to perform along with other major economies like Indian economy. Now for an Indian economy, there will be definitely a short-term volatility, which I was telling since last 3 months that Indian economy will see some volatility. And why this volatility? Because the money from FIIs are moving from India to China. And because it is moving from India to China, definitely that impact will have a major fall in the Indian market since last 10-15 days. Whether we will see more correction in the Indian market, I think we can see a much more correction in the Indian market. But definitely the correction will not go beyond 10-12% kind of thing, especially in the Nifty companies. But Chinese market are going to go up and it may actually help other market to stabilize. Indian market was expensive, Chinese market was not expensive, and actually it was inexpensive. So obviously the money moved from the expensive stock or expensive market to inexpensive market once the inexpensive market start performing. But definitely if the global economy needs to perform, the Chinese economy also needs to perform, and that is the reason that probably the China is going to do well in the next couple of months or years. May not see this kind of growth, but definitely will see growth. And I think that all over the economies around the world will start performing also. They are everywhere. There may be a small and mid-term kind of a correction, but definitely that correction won't last for a very long period of time. Slowly, gradually it will get into a better position. Thank you for watching this video. If you are liking this video, then please click on the like button. You may subscribe to the channel to get more this kind of videos. But please remember, this video doesn't tell you to invest in China or invest into any other market. It is actual for educational purpose based on the real-time data and everything.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.